Hello and welcome to ETF Interviews. I'm Toby Laws, Deputy Editor of ETF Stream, and I'm joined by Willem Keogh, Head of ETF and Index Fund Analytics at UBS Asset Management. Willem, thanks for joining us.
Yeah, sure, thanks very much for having me.
Willem, UBS had a great 2025 for flows, over 20 billion into the range. Where were the key pockets of demand?
So 2025 was kind of a continuation of the flows that the market was seeing, particularly around core benchmarks. I think with the core range that we launched midway through 2025, we really refocused our core exposures, repriced some of these exposures, and essentially, we saw quite a lot of flows into these kind of instruments. But interestingly enough, core was not the only story of 2025. I mean, commodities was clearly also a big driver. And because we have such a varied shelf, we still also saw quite substantial flows into some of our sustainable solutions.
Great. And you touched on the core range there. That included sort of a sweeping range of fee cuts on the most core exposures. What was the thinking behind that?
So I think with the scale that we have in our indexing solutions, I mean, UBS is now the largest Europe-based index tracking provider, if I can call it that. And we have nearly 25 years of experience in ETFs. It was important for us to look at what our client demands were. And clearly with core such a dominant player in the flows, we felt that this was a good time for us to bring out a UBS core range, providing our customers with all of the traditional building blocks that you would have in these iconic indices.
And you've recently extended it, I think. Could you please tell us a bit more about what you've done there?
Yeah, so I think we continually evaluate our shelf, and the kind of omission that we had in the first launch of our core range was obviously the Euro Stoxx 50. Euro Stoxx 50 is still one of the premium indices used within European investors. It provides a good exposure to Europe, and I think also with a continued, I would say, emergence of flows into Europe, this made sense for us to add this and complement our existing core range for our investors.
And we're here at ETF Ecosystem Unwrapped, and there's been a lot of talk this year about active ETFs. You guys entered last year with a CLO strategy. What have you been working on since on the active side, and is there more product development to come?
Yeah, I think active ETFs have been a topic for a while now, and usually the way that we look at our pipeline is we want to see where we have expertise, and I think with the CLOs, with the credit investment group that we kind of inherited through the acquisition of Credit Suisse. This is their bread and butter. This is a staple business for them. They are the experts in CLOs. And then, it makes sense for us to go down the road of taking an active CLO approach and providing an ETF wrapper around that. So I think for us, it's not really about coming out with tons of active products. It's more of leveraging existing expertise that we have within the group, and then bringing a solution out to our clients that has clear differentiation.
And you've been for over a decade in the currency-hedged ETF business. Why are these tools important for European investors? What do they add to the portfolio or to the toolkit?
Yeah, so I think European investors, always look at investing in areas where there's interest for them. If a European investor, for example, invests in the US, then you have this currency effect where essentially if you have a depreciating dollar, all of a sudden you can have very good returns in dollar terms. But when you then repatriate, the returns become then substantially impacted by this currency differentiation. And essentially what we see with our clients is that they have the option of hedging the currency. So essentially it's a nice tool for them to be able to tie it up with their macro views. They can partially hedge, they can fully hedge, they can decide not to hedge. This all depends on what their investment horizon is, what their risk appetite is, and what their view on the currency essentially is. So it's more about, if you think about, if you believe that the dollar will continue to depreciate, then it makes sense for European investors to hedge their exposures, to then have a decent return in their base currency.
And are you seeing more interest for tailor-made ETF solutions? What are the key use cases of these?
Yeah, I think tailor-made solutions is something that is again coming onto the market. But I think one always has to consider, what do we have on our shelf, what is the demand that we see from investors, and then how to best match that up. So I think we always try and listen to our clients to understand exactly what it is, and then bring out something that meet their demands, but also not really just for single clients, right? You try and capture a broadest audience as possible. I think we'll have to see how this develops over time. But I think the nice thing about ETFs is that it's such an innovative environment. There's always something new coming out, and it is always trying to just provide the best quality service that we can to our investors. And having done this for over 25 years, it's really important for us to then continue also for the next 25 years to be able to provide the correct exposures for our investors to meet their investment objectives.
Great. Well, I believe you're on stage later, so thanks for joining us today and best of luck.
Thank you very much.